Let me know if this sounds familiar. You see a really high level setup. You see Tesla is testing this demand level. You see this is a nice green wick telling you buyers are interested, and you see some consolidation. You think to yourself, yeah, I'm taking a long position. This looks really nice. You set up a stop loss right below the level of demand and a take profit level at the next supply level. You think to yourself, yeah, this looks really, really good. I can make some good money today. You place your order and you wait. But just like clockwork, Tesla sells off. You're extremely sad and depressed and frustrated, and you get back to drinking just like your uncle. Don't be this guy. All right, guys, so we are back looking at Tesla. We can see Tesla is at this 248 level, and this is a level that normally would tell us that Tesla wants to find support at. If we look at the last couple times that Tesla came to this level, we found a nice bounce here in pre-market, and then Tesla came back to this level. And if we look at that green wicking candle, that tells us there are buy orders sitting at that level. Tesla comes back to this level, and on a 1 minute time frame, we can see this consolidation at this level, which usually tells us there are buyers sitting at that level with those lower wicks showing those buy orders right at that demand level almost perfectly. So this is a scenario where you would look at this and say Tesla looks like it wants to bounce at this level, and you would probably be taking a long position right here, targeting the next area of supply up there, setting your stop loss right below this major demand level in case the trade goes against you. And you are waiting for Tesla to bounce at this level. But what happens? Like clockwork, almost every single time, the demand zone breaks and you are confused and left frustrated on why it did not hold. And it seems like it only holds when you are not taking the trade, and it breaks every single time that you take that level. I'm going to show you guys why this happens and how you can know every single time whether this level is going to hold, this level is going to break, if the supply level is going to hold, if the supply level is going to reject or break above. And that all has to do with something that is greater than demand or supply levels. So what do demand and supply levels tell us? Demand levels simply tell us that there were buy orders here previously. So we can see there were buy orders here previously, buy orders here previously, and that is why we are bouncing. There are limit orders sitting at that level. Same thing with, these are demand zones, I'm sorry. And then with supply levels, it's the opposite. There are sell orders sitting at that level, which is why we reject those levels. But that does not have to always happen. Sometimes we can see small bounces like this, and then the markets immediately break below this level. And this all has to do with emotions. So if I told you guys that there were 1 million traders that were trading Tesla right now, but they were all nervous and they were all scared, would you assume that Tesla would hold this demand level? The answer would be no. You would think Tesla would break the level because all of these traders, these millions of traders that are all trying to get into a Tesla trade, are all nervous and scared. They're not getting in with big positions, and most likely most of them are shorting Tesla. So eventually this thing will break that demand level and go lower. Now, obviously, we cannot go and speak with every single person that is taking this trade on Tesla, but what we can do is use a tool that is free, that is popular, that will tell us what the general public is feeling. And you guys know what I'm talking about. This is VIX. So VIX is our volatility tool. It's our volatility index, and it tells us how markets are feeling. It's our greed and fear markets. It tells us if there is heightened volatility in the overall market, and vice versa, if there is calmness, if there is uncertainty, depending on where we are sitting. But the level that VIX is at is important, and there is something else that is important, which is if VIX is rising or dropping or consolidating at that level. I'm going to show you guys exactly how I use VIX to help me with every single trade, to let me know if I should be looking at that demand level as a buy or if I should be ignoring that demand level and looking for short positions. So let's quickly go back to Tesla. We can see this Tesla trade was on Friday, and this was around 9:45 where Tesla came to this key level right here. So now we're going to go back to VIX, and I'm going to show you guys exactly how I use VIX to help me with this trade. So I'm going to go to a 5-minute time frame really quick, and I'm going to just hide all of these drawings right here just so it's very clear and easy to see. So if we look here, we can see VIX on Thursday. So we want to take a look at VIX on Thursday and compare it to VIX on Friday. So if we look here, let's just zoom back, and we want to look at when market closed on Thursday, which is kind of right here, Thursday at 4:05. So market closed right here. And we can see at this time, VIX was at about 29. So the VIX level was about 29. And if we look at about 9 o'clock, which is right here, about 9:30 when market opened up, we can see VIX now is at 37. So VIX went from 29 to 37 from the close yesterday to the open today. So what does this tell me? This tells me that there is extremely heightened volatility in the overall market. And I don't want you guys to just guess what that could mean, because VIX going from 29 to 30 is VIX rising. VIX going from 29 to 32 is VIX rising. But I found a system and a breakdown of every level that VIX goes to and how we need to be determining those levels. So what do we know from here? Let's just draw it out real quick. We know VIX was at 29, and now VIX is at 37. So now VIX is at 37. So VIX is rising. So VIX is rising, and it is currently at 37. So now quickly, I want to show you guys this folder that I created that details every level of VIX and how we need to be reading this and looking at the overall markets. So if VIX is at 37, this is my folder right here, and I can click on it like that. And when I open this up, it tells me VIX level 37, whether VIX is rising, dropping, or consolidating. And as we saw, VIX was rising into 37. And this is what we should be expecting at this level. What to expect? Market sentiment is at panic levels. Supply zones are exceptionally strong, and even solid bullish setups are often rejected. What did this say? Solid bullish setups are often rejected. Let's go back to Tesla really quick. If we go back to Tesla, we can see this was a solid bullish setup, but this told us even solid bullish setups are often rejected. What is the trading approach? Prioritize short setups at resistance. Use very wide stops to account for unpredictable reversals. Avoid committing to long trades unless there is a clear consolidation support. Focus on shorting failed breakouts at key resistance levels. So what I got from this is VIX rising to this 37 level means that markets are in panic. Those millions of traders are panicking, and I don't want to be putting in large size. I don't want to be trusting demand levels because they can break. I need to be looking for short setups, possibly at resistance levels. I need to have a bit wider stops because there can be a lot of reversals. And I need to know that breakouts usually do not work out, and I should be doing the opposite. If I see a stock breaking out, I should be expecting that to fail and to start dropping lower. So with this, I go back to Tesla, and now I have a clear idea of the type of trade to take. Am I taking this trade at this demand level? No. What trade am I looking for? We can see Tesla broke below that demand zone, which means this now becomes a supply zone, and Tesla comes back to that level. And this is the trade that I should be taking. I should be taking this short position at this level, not the long trade. I should be allowing my stop loss to be a little bit wider because there can be a lot of erratic price action, and we can see Tesla drops from that level, and it even gives us, I believe, a second opportunity if you wanted to get in later in the day over here. So guys, this is how we use VIX. I'm going to go back and show you guys just all of my breakdowns. You can see every level tells us exactly what we need to know. If we go to VIX at 12, this is when VIX is at a much lower level. And you can see if VIX is dropping at the 12 level, what do I expect? The market remains calm and stable with little fear, little uncertainty. Demand zones hold very well, and breakouts to the upside are more reliable. So now, if I see VIX is at the level 12 and Tesla is holding a demand level, so just say Tesla is at a demand level right here. So just say Tesla is at a demand level and VIX is at 12. Now, what do I know? Those millions of traders that are trading Tesla are calm. There's not a lot of fear in the markets, and they are pouring money into Tesla at the demand level. And at that point, I should expect Tesla to hold this level and to continue higher. So guys, that is all for this video. If you guys want a more detailed video, or if there's some things you didn't understand, make sure you comment them down below or send me a message. I'm gonna put this file in our private group. I'm gonna leave the link in the description below for that. If you guys have any questions or anything, like I said, just make sure you guys send me a message and I'll try to clarify anything. I hope this video helped you guys. I know it was a longer video, but this is extremely important and something that will absolutely help you with your trading. I'll see you guys in trading on Monday. Peace.